Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's very close to the end of the month, just a couple more days trading, and we end the first quarter, which has been an interesting one to say the very least. But a few things are happening I want to bring to your attention today. We're going to start off with crude oil. Crude oil is down big today. And you can see this is the daily chart of the May contract. As you can see, we're down 3.18% and very close to this level here, which is a very key level in our mind. 37.71, which is the low right here, turns our green trade triangle red, indicating further weakness. Now, I want to step this forward and let's say we do break that level, and let's see how far we can go on the downside. So I want to put our Fibonacci tool on. Click here once. Click on the very, very high point and drag it to the very low point right here, the last major low, which is right here. So we could be looking at, now let's see if we can get that just a little bit better. That's good. So 35, 33, I would say 35.5 would be a good shot on the downside here, which is actually quite a bit lower than we are right now. So I think generally speaking, we're below the 50 line on the RSI. We're also below the parabolic, and if this last sort of pillar falls, then we're going to be on a very much more of a downslide in this commodity. So watch that very carefully. But generally speaking, it looks to us that crude oil has topped out. And let's just put this in a very simple term. So let's remember 35.50 as a downside. Let's clear the screen for a second. Let's go to a simple line chart and let's just see where we're looking at. So this is how I'm seeing the thing. I'm seeing, let's say 35.50, which would just be around these levels, right around here. And that also coincides with these lows right here. So just step that forward. It's also going to be the 61.8% Fibonacci retracement. So let's call it 35.50 as a potential downside, providing we see the low broken right here. And this is 37.71. If we go below that level today, then it's going to be a lot of pressure on the weekly trade triangle, and it'll turn red, indicating further weakness. Now, as you can see, gold clicked in on a daily today, which meant you should be out of this position. We've taken a small loss, but generally speaking, looks like the market has made a turn, but it's still not out of the woods yet. You can see we're way, way, way below the 50 line on the RSI. You can see that right here. It's just really kind of way below the 50 line. And also you're below the parabolic, which is this line right here. Only thing that we have going for it really right now is the monthly trade triangle, which is longer term positive. Now I think what we'll see, we thought we'd see a low in April, possibly even May, but I think generally speaking we could see this market just sort of move sort of sideways for a while and sort of build itself up and then move higher. I think that's more a likely scenario. Let's see how that plays out. But generally speaking, you should be out of any short-term positions in gold. Here we're looking at the Dow. You can see the Dow basically has had for the last really 6-7 days, it's just been moving sideways, really no direction. Janet Yellen speaks today. And by the way, I just heard, just before I recorded this recording, was that all U.S. personnel, ambassadors and so forth have been ordered out of Turkey. Not a good sign. Not a good sign. Certainly not a sign of any kind of U.S. strength. So anyway, with the Dow, I think we could see this market go lower. We're down below the parabolic. We're still way above the 50 line, and we still have this mixture of red and green trade triangles. The weekly is the only one that's really keeping this market up. If that breaks, then we'll see this market fall. So what we're looking here, again, we put our Fibonacci tool on, click on the very high right here, drag it to the lows, to the double bottom, and we could be looking at 16,500, even 16,300 on the downside. So that's what I think is going to happen here in the not so distant future. Let's see how that plays out, but generally speaking, it looks like this market's going to be on the defensive, and maybe what Janet Yellen has to say this afternoon is going to kick it off for a move on Wednesday. This is the NASDAQ. As we talked about, the NASDAQ is very close to the parabolic at 4,734.77, which we outlined in today's report. Should we go below that line, I think we'll see more pressure. This is by far and away the weakest currency. Did not enjoy the super move we saw from the February 11th period all the way up to just recently. It didn't have the same percentage move, but it certainly looks like it's beginning to roll over, and I'd pay close attention to the parabolic on this market. The only thing that's keeping it up, in our opinion, is the weekly trade triangle, which could turn. Certainly it'd have to go maybe below 4,600 right now, which is quite a ways away. I don't think that's going to happen today for sure. So just be on your guard and be careful and be vigilant. Okay, the last market we're looking at today is the S&P 500. You can see all the markets we look at just by looking at the top bar here. It tells you exactly what it is. So this is the S&P 500. You can see it's below the parabolic. It's beginning to turn down on the overbought, the RSI. And generally speaking, I think this market can also pull back. We're going to put our Fibonacci tool in. Now, you've seen me use this before many times. It's very simple. Click here. It's a very powerful tool. Go to the lows, and that takes us down to around 1900, 1950, somewhere like that. I think that's a reasonable target to look at. Certainly, I think these lows, if we just put a close-only chart on, you can see these lows here are right around the 1950 level would be a very, very natural place for this market to find support. So let's see how it plays out. But as I said, I'm a little uneasy about the markets, and I think we're going to see some sort of a pullback coming into the equity markets and in stocks in general. But let's see how that plays out. And remember, each individual stock is different. Obviously, Facebook is going higher. All our trade triangles are positive. IBM is going higher. All our trade triangles are positive. Plus, I think McDonald's is also going higher. All of our trade triangles are positive. So look at these trade triangles. They're powerful. They're easy to use and easy to interpret. Hey, I'm Adam Hewson. Thanks for stopping by. And be sure to leave a comment on our social page, on our blog. We'd love to hear from you. Thanks for watching. Have a great day.